Hannah Wallace and welcome to Finextra. With me today is Michel Kilzi, CEO of FINEON, based in Luxembourg, and we're going to be talking about trade finance. Hello Michel, thank you very much for joining us.
Thank you for having me.
To set the scene then, what state is the trade finance market in today and where does FINEON fit in? How do you see your marketplace value proposition in terms of the financing of exports from developed countries to emerging markets for all stakeholders?
So basically today, as you know, European companies are facing challenges in terms of organic growth, so growing more their business into developed markets. So they're looking eventually to export towards developing markets and emerging markets. And this is where they can gain more market share, increase their revenues. But of course, this is of a higher risk compared to developed markets, export or trade. And therefore, they're looking into how to mitigate the risk into those countries, how eventually to be paid earlier. And some of them, according to some statistics, around 40% of the large exporters are missing on the opportunity of selling more. And here comes the structured finance and the insurance into all of this. So FINEON Exchange as a marketplace, we're building an ecosystem, we're creating an ecosystem that is not really about a fintech disruptor. We're coming from trade finance background, we're trade finance practitioners. We're bringing technologies to the benefit of the ecosystem in a way to do things faster, more efficient, and in a way to support the needs of those exporters. So we know what they're suffering from, we know what they're looking into, what they need in terms of working capital optimization, in terms of looking into cost of capital, in terms of enhancements on their balance sheets. So this is FINEON Exchange, let's say, mission statement. And definitely it's about three cornerstones. So the exporters, industry federations, eventually Chamber of Commerce from one side, banks and FIs, non-banks, let's say, and the third one being the insurers, the credit insurers, and they have a major role to play into all of this. So we're having a marketplace that will, where we're playing the role of the advisor. So we're advising the exporter on how best to position and structure their portfolio, their receivable finance. And then we're matchmaking the exporter with the right insurer and the right funder. In a way, building an ecosystem that upscales benefits to all stakeholders.
All right, and what are the technological innovations present on your marketplace? And what are their business functions vis-a-vis the marketplace's stakeholders?
Sure. So as I was saying, we're bringing technologies to the benefit of the ecosystem as a whole. So first, we're starting with an AI. We're embedding artificial intelligence into the platform, creating kind of a virtual RM, relationship manager, who will advise the exporter on how best to position his portfolio, how to structure his transaction. So it's a robot advisor that has intelligence behind it. It will help out the exporter to best channel and structure through different financial tools, financial instruments. And it will help the exporter fill in all kind of documentation that is needed for onboarding. So in a way, you know, we have to go through onboarding, KYC, and all kind of compliance. So this is a way to standardize information, and it's a way to help and get faster the onboarding process for banks. So banks love it, banks and non-banks. So in a way, we're facilitating their life. We're speeding up this kind of, let's say, onboarding cycle. Then the AI, the robot advisor, will go into machine learning and what we call deep learning. So it will get to understand what are the criteria, the terms, the preferences of the banks, of the insurance. So the entire matchmaking and placement becomes more efficient, it goes faster, and it really get to a scale where things become really seamless and going fast. This is from one side. From the other side, we're using DLT, so distributed ledger technology, to ensure quality of documentations, integrity of documentations, and security. Then the matchmaking is fully automated. Definitely in the early stage there will be human intervention behind it, but as long as we're relying on the machine learning and the deep learning. So in a way the machine will get to learn as long as there will be more transactions, more stakeholders in the platform, in a way to be more efficient and do things in a more fast way, more efficient way.
And finally, Michel, looking towards the future, how do you see the trade finance and export finance market developing in the next 5 years?
As FINEON Exchange, we're focusing only on export finance, receivable finance, and this is a market that is growing tremendously well. Simply, organic growth within Europe is becoming a challenge. So all of those companies are looking into exporting, and today exporting towards emerging markets and developing markets. This is where they can gain extra additional market share and grow their revenues. But definitely it's more of a high risk export. So you have two components into this equation. One is structured finance, and today there's lots of financial instruments, and it's becoming an art. We can innovate, we can go into hybrid models, so it can start from vanilla products such as LCs, confirmation of LCs, going to forfeiting, to asset-based lending, and even going the extra mile towards receivable securitization. But it can end up into any hybrid model. So this is from one side. From the other side, as you know, the banks are under heavy regulation restrictions coming from the Basel 3 or now Basel 4 or what have you. So in terms of mainly capital requirements. So the alternative finance and the non-banks, the FIs coming into this play is something that is happening. So we see that, first of all, trade finance as an asset class is a beautiful asset class. It's short-term, it's self-liquidating, it's linked to a floating rate. So lots of asset managers are getting interested in this asset class. There will be more, investors, funders into this arena. There's a $1.6 trillion worth of trade finance gap worldwide. So we feel that in the next few years, the pie is going to grow. So the trade finance gap is going to be reduced. There are statistics that say in the next 5 years, the 1.6 trillion trade finance gap shall be reduced to 1.2. So, and there will be a rebalancing between banks funding and non-banks funding.
Well, certainly some exciting developments ahead then. Michel, this has been great. Thank you very much.
Thank you for having me.
And thank you for watching.